So for us at 11FS, whenever we're creating a new product, we use digital riches every day to make sure that we're focusing on the things that really matter to the customer, not just the things that actually make the product in the first place. Today, what we're going to be talking to you about is digital riches. Now, digital riches is one of the terminologies that we've been using for the last 4 years to really ensure that we focus on actually how we create our products to really fix a consumer problem. What I should start with probably is to sort of break down what I mean by that, because really when people think about products, very often within financial services, they're thinking about what we would consider the wrong thing. I mean, if you think of any new product that's come to market, if a bank, big bank right now was considering building, let's say a Monzo type clone, what they would probably start with is, well, actually, it's all about payments. We need to be able to do payments, and we need to be able to do transfers, and I need a sort code, and that's great, and maybe an account number as well, right? So these are the things that actually, as a person who looks after product within a large bank, that you would consider as the requirements to put into your digital transformation team to start building out this product for you. Now, the reality of that is the customer doesn't care about any of that type of stuff, unfortunately. I mean, no consumer on the planet wakes up and goes, I wish I could do some more transfers today. It's just not something that they actually really say. So when you sort of come to what the consumer really needs, it's, I mean, how am I doing is a fundamental of where they're at. How is this month comparing to the last month? Am I spending at a quicker rate than I have done before? Will I be able to retire? Is a major thing that many people kind of think about. Like, am I ever going to be able to retire at any given point, given how the markets are moving? Generally, does this look normal? Which is an interesting point on anybody's kind of finances. But most people really have no concept of actually how they compare or how they're doing against anybody else. I mean, basic things again on, like, can I save more? All pop up with everybody's day-to-day lives, because actually this is the reality. And the difference between this and this is a fundamental. You've got consumers up the top here really trying to figure out what it is that they actually need to do. And in none of them is this actually about making, having a sort code, having an account number, making transfers, making payments. Now, the big gap that opens up here is really the difference between actually what the financial instruments that are being provided from the banks and actually the brutal day-to-day realities of actually people's lives. And if organizations think much more about this side, which is the things that are really driving the consumers, rather than necessarily just the things that make up the financial instruments that fundamentally underpin them, then actually you'll start to see that financial products are being built in a completely different way. This gap, I should add, is really why fintech exists in the first place. If the organizations that were in the market with millions and millions and millions of consumers were thinking more and more in this camp, providing intelligent digital services that actually solve these real problems, then this gap wouldn't open up, and fundamentally fintech just wouldn't need to exist in the first place. This really is just opportunity being left on the table. So when it kind of comes down to digital riches, as we say, for us, riches is how we stick to ensuring that we focus on this side of the fence. So for us, riches breaks down like any good, and this isn't just about riches as in ensuring that your organization has ROI. That would be good too, don't get us wrong. But this one is all about, well, the R is about real time. So what difference does it make if you start making products that are fundamentally real time? Because if your product is real time and actually you're able to surface information to them, that your architecture, your capability can surface information to your consumers in a real time sense, then the richness of your services that you're delivering will be so much greater. On the other side of this, we have intelligence. So if we are able to start making our services intelligent, if we're able to start using the huge amounts of data that actually we have on consumers to start treating them much more as individuals, Arguably one of the major things that have really been removed from financial services is that one-to-one relationship. The internet very much was heralded as the return of that, using all of the wealth of the data that we have on consumers to be in a situation where people can start acting and engaging and providing services that really treats them as individuals. But what would a service be today if you actually made it much more intelligent? How would that make the consumer feel? How would that enrich that service? And how different would that be as an experience? The next one is all about being contextual. So if you actually want your product, you want your service to actually start being thought about or used in the context of where it would be most useful. How would being in, for example, actually real-time notifications while you're walking through an airport to ensure that actually people have context of where they're traveling to, or the benefit of what the exchange rate is, or ensuring that actually top of mind or front of mind is the travel insurance policy that actually you've brought to these people. How do you actually start surfacing your services in a way that actually shows, again, the level of intelligence that you have for them? The next one is all about being human. Now, this is reasonably ironic given we're talking about the creation of intelligent digital services. But actually, one of the things that has been most removed through this process of digital transformation over the last 10 years is the humans. And that's not just physically like you or I. Fundamentally, this is actually humanity in the way in which we just talk to people. Most of the communication, most of the reinforcement that's done from big financial services organizations to consumers right now is probably far from human ready. I'm not sure human consumption of the text messages or the letters or the website copy that goes out there is really fit for human consumption right now. So how do we break that down? How do we start to really consume information in a way that actually would be much more akin to relationships and social relationships than it would be just a big, in-charge organization sending you distribution of communication. And actually this one starts to break down to really, really silly things like uses of emojis, but equally into really, really big ones. The things that if you consider on the right-hand side of this is the day-to-day worry of human beings walking around just trying to live their lives. Nobody wants to engage with financial services. It is a grudge at absolute best. So the easier we can make it for people to understand basic terminology around financial services topics, the better this is all going to be for anybody. The next one is all about being extendable. So how do we allow the things that we're creating, the products, the services, and everything that we're doing to actually be surfaced in places that we need to? Now, there's been a really great push with everything that's happened with externalization of APIs, predominantly driven through open banking, but many organizations doing so much more and are actually externalizing so much more APIs to allow their services to be extended into other places. But really for us, the financial services isn't somewhere that you should go and do in isolation of what it is. The best example of this one right now is payments. No online shop would work without the mechanism for payments. And increasingly that's becoming quite a crowded market, whether it's that button for PayPal that started it all off in the mid-90s to being in a situation where now you've got loads of different choices from Amazon Pay to Apple Pay or Klarna or all of these different types of players in this space. Very much for us, it's about how do you take the thing that you do as a service and then take it to the place where it's most relevant to actually the consumer. So a really good example of this is in the mortgages space. Really, should you be in a situation where you first have to go to a bank to find out how much you can borrow, to understand what your categories of search should be for a house? Or actually, should you be integrating those things into the places where it's most relevant? Arguably, integrations for mortgages services and actually an understanding of how much money you can borrow would be far more productive in a Rightmove or a Zoopla than it would be on one bank's website. So how can you look for opportunities to really extend your services to create those end-to-end journeys? One of the best examples of these out there in the world right now is Uber. Uber do almost nothing themselves. It is a beautiful business model because integrating originally Braintree's payment system, Google Maps, having a bunch of other people who own a bunch of cars, you can create a global taxi service. So how could you push to integrate your service for a much greater distribution. The last one is all about being social. And when you look at what I mean by social, this isn't about, a button to share it to Twitter or Facebook. This is about fundamentally the comparison. And it's the comparison both against other people, but also against yourself. Banks have been incredibly poor at actually telling people how well they're doing. Considering the amount of anonymized data that they could sit on the back office that they have access to actually start surfacing to people how well they're doing from a spending perspective, how well they're doing from a savings perspective. Are they planning effectively for the scale of family that they have or their regularities of their monthly outgoings? There is almost no support or no leverage of that data at this scale. And while some of those examples that I've used there are very significant for the amount of information that banks in the back office would have to crunch, some of these can be incredibly simple. Just a very basic understanding of actually how month on month my spending behavior changes actually starts to really illuminate areas of opportunity to do much better things. Knowing things in this space, me against me, might actually allow me to solve some of these problems in a much stronger way. So for us at 11FS, whenever we're creating a new product, we use digital riches every day to make sure that we're focusing on the things that really matter to the customer, not just the things that actually make the product in the first place. Thanks very much.